Good evening to you in Asia, good afternoon to you in Europe, and good morning to you in the United States. If you are just waking up and coming to join us, you are very welcome. It is very good to see you all. Welcome along to this special non-farm payroll live stream that we've got for the beginning of September. I cannot believe it is September already. There's plenty to get through and plenty to be dissecting across all of the markets at the moment as we kick on into that final bit of the year. Welcome along. It's good to see you. What have we got on the menu for today? Well, we are live on YouTube. We are live in the trading room as well. So hello to everybody, no matter where you are, no matter where you're joining us from. I hope you've had a good trading week so far and you managed to pick up a few winning trades before the end of the day. It will certainly be a good kickoff to the beginning of September. Good everybody. Hello to everybody in the room. T. Young'un, hello to you. Jez, Mark, it's good to see you. Good evening to you. Mr. Connor Woods is all across the trading room today, and our fellow coach in the United States, Shane Veneer, is on the YouTube channel as well. So if you've got any questions, please do drop them in there and they'll be sure to help you out. Okay, so what are we doing today? Well, it's that time again. It's non-farm payroll. It's the biggest event that we have on the economic calendar. We are looking for 170,000 new jobs to have been created in the United States. That's from the previous 187,000 in July. Are we going to get it? Well, that remains to be seen. We will find out in just around about just over 10 minutes time. But we're going to get some other data as well that you will be you'll start to get used to, particularly if you're new to trading, and this can feel a little bit overwhelming, but do not be bamboozled by any of the numbers. It all starts to make sense with a little bit of practice. We get that non-farm payroll data. We'll also be printing an unemployment rate data for August as well. That's expected not to change at 3.5%, and also the average hourly earnings as well. They will be printed to 4.4%, and you'll notice that both that unemployment data and also that average hourly earnings data, they are not expected to change. That's different for the for the course of this year, and that could put a sort of like a slight question mark over the data today. So we could have a particularly volatile session if we don't get a meaningful non-farm payrolls number. So what is it all about? What do we need to know? Well, if you're new to trading, non-farm payrolls is the biggest economic calendar event that we have every single month. It's basically all of the new jobs created in the United States on the previous month. So today we get August data printed. It comes to government statistic. It comes from the Bureau of Labor Statistics. The website address is just in the bottom corner of that graphic there that you can see. If you want to deep dive into any of this data, I mean, that's a heavy lift for the weekend, but please do be my guest and have a look at the data that is printed on the website. A fascinating website full of really interesting statistics to do with the American economy. But we do get those three reports printed at the bottom of the hour. It comes out at 8:30 Eastern Standard Time in New York, and then also that's at 1:30 here GMT. So it's non-farm payroll changes, it's average hourly earnings, and also unemployment data too. So it's a whole mix of data. Okay, so from a jobs point of view, it has been a particularly busy week. We started on Tuesday with the JOLTS job openings. That stands for jobs openings and labor turnover. This is basically how the businesses see the labor market. We basically get a measurement on all the new hires and the various different vacancies there, whether that's going up or down. If people, unfortunately, if they've not working because they've died, or retirements, or layoffs, or redundancies, all that type of stuff that gets sort of mashed together, and we get that number printed on Tuesday. You'll see the actual reading that we got was way under what the market was looking for, and you can see the trend down in that JOLTS number. And what are we seeing there? We're starting to see some pressure on the jobs market now come from all this in these interest rates that we've had baked into the cake. I don't know, but it's certainly, we've been looking for this recession all year. We've still not got it, but that definitely is starting to look to me like pressure on the jobs market. That was Tuesday. Then that follows on to Wednesday when we had the printing of the ADP employment change. Now this is slightly different because the ADP data is again, it's private sector, but it's a slightly different reading because it doesn't include anything to do with government statistics. If you are a private sector worker in the United States, it's a high possibility that your payslip, your monthly payslip, is processed by ADP. It stands for Automatic Data Processing. They're a private company, and then they release the statistics that they find as a result of that. Look at that that downtrend there in the data, that stepping down. Again, as a piece of jobs data, it underwhelmed the market. The market was looking for 195,000. We did not get that. We got 177,000. Now, you'll notice if you look at the chart of the S&P 500 that both of these days, they printed in that dovish print from the data relatively quickly. So that is why we're getting a lift up in stock markets at the moment. You can see just at the moment on the session so far. Oh, that's the wrong one. That's the room. That's the one that I want. We have got an S&P 500 and a Dow and a NASDAQ that are just pushing to the upside. So what is the market pricing in here? It could be one of those days where if we do get, we don't even get a meaningful number. It could be the fact that we get a drop down in stocks today simply by the fact that the market has been pricing all of this in so aggressively all week. Euro dollar is looking relatively flat on the session at the moment, and the gold market too, just pushing up a little bit at 0.24% on the session so far. That dollar index is just under the open for the day at the moment as well. So pretty calm in the currency markets. It's those stock markets that are just edging higher at the moment. So what is going to happen? Well, we will see. We certainly need a game plan, that's for sure. And if you are used to trading non-farm payrolls, you'll know how volatile it is. What do we need to know? Well, it's about the blend of the data, and this comes with time and practice if you've never done it before. As I said before, it's the fact that we don't have the unemployment data, expectations for the unemployment data, they are not set to change. And the same with the average hourly earnings as well. They are not set to change as well. So if we can't get anything meaningful out of the non-farm payroll number today, you bet your bottom dollar that if we do get some sort of a change in unemployment data or average hourly earnings, that will be where the emphasis is. So if you've sort of got your game plan in and the markets don't react necessarily how you think they're going to react, that can potentially be the reason. So the important point for this month will be that no change is expected in the unemployment data or the earnings, and that puts a lot more pressure on the actual data. And now as we go into towards that last quarter of the year, it could certainly sort of like set us off on a really volatile note right from the beginning. Okay, so let's look at our actual game plan itself. We need a game plan. You don't get anywhere in trading if you don't have a game plan, and this is what we use in the trading room every single non-farm payrolls. It's our game plan for understanding a hierarchy of the data. We've got the dovish hawkish play is still alive in markets despite the slight change in tone in Jackson Hole the other week into the global economic problems that are sort of like starting to grow rather than the problem with inflation. But nevertheless, the market is still giving us this hawkish dovish play. So we're on the hawkish side. If we get a high print in non-farm payroll that's better than expected, better than the previous, the markets that should trade that as a stocks down, dollar up type play. So that's euro dollar down. Remember, we're looking for strength in the dollar. So that is euro dollar trading to the downside, dollar yen trading to the upside. If we get a dovish play, that is pushing to the downside in the data. That is a stocks up, dollar down. So the complete opposite. Now, if we don't get any clarity from there, you move along to the next one. So this is where you have to be a little bit nimble, and it comes with time and practice. And a bit of reviewing over the weekend of the actual print will always help you out. No question about that. So we're looking for no change in unemployment data. If that pushes down, that will be hawkish. That the markets have not priced that in. So you'll have a stock market that will fall off pretty quickly if we do get a drop in unemployment, I would have said. And then the opposite side of that, if we then get a push higher in unemployment, that would be dovish. Why? Because it's basically saying the interest rates are hurting the system. You need to sort of, roll back on those interest rates. And that will be then bring us to a situation where the stocks will price that in, price up higher, and then the dollar will fall off as a result of that. Average hourly earnings, again, the same sort of deal. So that is basically the outlay, the way that the markets are potentially set up for the current session. Now, we're just a little over 5 minutes away. So what we can certainly do is have a quick check on the actual trading room, see if there's anything meaningful going in there. We have been running a poll in the trading room. Let's see if I can just drag that up now. So in terms of the actual print, what do people most think that they're going to get? It doesn't say. It's still not. Okay, so there it is. So most people believe that we'll be getting a print between 169,000 and 200,000. So they're just slightly pushing. They're optimistic punching the trading room. That's good to see. We're teaching everybody well. Jenny's looking for 175,000. So I don't know. I suspect though any dovishness feels like it's being printed in, unless the number is really, really low. But nobody knows until we get to the bottom of the hour. So that's our plan. That is basically what we've got. That's what's basically what we're looking for. I'm just looking in the YouTube chat to see if there's anything in there that we need to highlight. Just bear with me. I've got so many screens in front of you. I should work for NASA. Let's have a look at. So people are looking to short the euro against the dollar, and also they're looking to sell gold. So someone's looking for some dollar strength there across the board, and other people looking to buy gold. Okay, well, for every buyer there is a seller, if you believe in the old trading adage. Okay, so let's move over to the actual charts. We've just got 4 minutes to go, so we can have a quick check on the actual markets themselves. What I've got here is I've got the euro dollar on the left hand side of the chart. I have got the S&P 500 on the middle chart that you can see in front of you, and then also what I've got is I've got the gold market on the right hand side. Now if I just bring up my chart so you can see there in terms of actual levels, in terms of like the way this is going to play, just remember that if we're looking for that weak dollar, we're looking for euro dollar to trade to the upside. It's when you're getting started in trading, that can be super confusing because you think like, well, you should be buying it, you should be buying it, you should be going short. It can be very confusing. That comes with time and practice if you're completely new to it. So a weak dollar, we're looking for the euro to print to the upside. If we're looking for dollar strength, we're looking for the euro to trade to the downside. That is what we need to make sure that you've got that fully understood. So in terms of like the way that this is going to go on euro dollar, I would say if we do get a dovish print, and that's a stocks up dollar down type play, that could certainly give us a meaningful push towards the end of the session, where we're heading back up towards this 110.61 area. Eurodollar has really been quite problematic for the last couple of months, not really trending in a meaningful way. I thought that we were going to get something a little bit more marked towards the end of this year. Maybe that's going to come in this final quarter. We have been feeling like we're particularly range bound. So I've got just got my eye on that 109.43 level there. You can see that down to a 15-minute chart, so we've got it all nice and clear in front of us. That, if we get that dovish print, that is where I suspect we're going to go. To the downside on here, we're going to be gunning back down to the last Friday's lows here at 107.63. We've just got 2 minutes to go now. Quick check on the S&P 500, how that is doing. That's the one in the middle there. And you can see there, on the daily time frame on the S&P, we've actually, I'm not going to show you now because we're too close to the data, but we have just poked our head over the Fibonacci 61.8 retracement, which is basically trend failure. Now, I know Shane is looking for all-time highs in the stock market, or he's looking for upside in the stock market between now and the end of the year. I'll be honest with you, do some analysis this morning. I'm starting to really agree with that. I think it's potential, it has a lot of upside potential from here, particularly with AI being so strong, but I'm slightly concerned that we're quite fragile with all of that NVIDIA AI stuff. So it remains to be seen exactly what is going to happen. Gold is on the left, on the right-hand side. You can just see we are just pushing up towards the session highs at the moment as well. Okay, so we're just coming up to the final minute. So remember the game plan. We are looking for 170,000 on the non-farm payrolls. We are not expecting a change in unemployment. That's set to stay at 3.5%, and also average hourly earnings as well. They are expected to stay at 4.4%. Okay, so we just got 30 seconds to go now. So I've got the squawk on. As soon as I hear the number, I will bring it to you. So good luck, everybody, if you are trading. 20 seconds. 170k expected. Dollar weakness. 187k.
.2% month-on-month and 4.3% year-on-year, both a tenth lower than expected. Unemployment rate 3.8%,
3.8% on the unemployment. That could be the game changer. 3.8% on unemployment.
Participation rate 62.8%, 2/10 above the prior. So again, 187k, 17k beat for the headline.
That's dovish.
30k, however. The average earnings month-on-month and year-on-year both 10
Wow, we got that dovish reaction in the S&P 500. Wow.
higher than expected, while the labour force participation rate was 0.2 higher than previously.
0.2 higher on labour participation. Gosh, look at gold.
June GDP month-to-month minus 0.2% in line. The quarter-on-quarter annualised minus 0.2%.
Nearly 0.5% already on gold.
4%.
Wow. Do you see that dollar coming off? You see it there in the euro as well. Stocks up, dollar down. That area there, 109.45 is if we get a trending move. The only thing that would worry me slightly from here on the S&P 500 is we've had a lot of dovish tone all week. You'll just see, if I just scoot this out a little bit, you'll see what I mean. I mean, this is a 15-minute chart. If I just take that to a 1 hour, you can see that's Friday, Thursday, Wednesday, Tuesday. Look at that on the jolts, and then the ADP follow through there on the Tuesday. That's that lift. So we're just pushing at those highs now. What you've got to remember as well is that's where the market, down from here, from 4,446, the market is pricing in that dovishness. So this is where you've got to be very, very careful, particularly going into next week as well, because it gets to a certain point where the market has priced has priced that in. Now, given the market was not expecting a change in unemployment, that is potentially where we could get rotation from. So what I'm trying to say is you get these markets, they price it all in, they top out, and then Monday, Tuesday, next week, you end up with it all rotating back. That can be quite common in this type of situation. We've also got 3 pushes to a high there as well, which is a sort of a wedge type structure. So that in itself is showing us that we might be at certainly an interim top there. I mean, I'll paint it in roughly. There you can see, it's not really that clean at the moment, is it? But you get the idea. 3 pushes to a high is definitely something that we look for as traders. So yeah, definitely an interesting number from non-farm payrolls. If anybody was trading that, then I wish you well. I hope you managed to get something out of that. Quick check on the trading room. Did anybody get any decent trades out of that? Let's have a quick look. JI Invest, hello. You managed to get a decent trade out of that. That's good to know. Nice, Dave. Hello to you, Dave in Portugal. It's good to see you got a good trade on the dollar against the yen. One of my favourites, no question about that. On the Dow, excellent stuff. Gold, great trade. The Sniper's got a good trade on gold. Good to see. All of this stuff, it's not, no one can forecast, no one can predict what's going to happen, but what we can do is prepare, and that is something that we do in the trading room every single day. We prepare people. We make sure that we've got a plan. When you're starting to learn to trade, it can be very, very difficult to know what to do because you're just so overwhelmed with information from every quarter. And the thing is, it never lasts very long. It's here, it's come. You've got to absorb it. You've got to filter it, and then it's gone, and it's on to the next trade, on to the next market, on to the next bit of economic information. So it moves so fast. That is one of the things that is incredibly enticing about markets, but it's also particularly tiring as well, particularly if you are new. So let's have a quick check on those markets at the moment. Yeah, so you can see those equity markets, all 3 of them, the Dow, the Nasdaq, and the S&P 500, all pushing to the upside off the back of that data. So yeah, definitely an interesting one to take note of. Okay, so I hope you managed to get a decent trade on that. We are going to be busy on the YouTube channel today because we are covering our live weekly preview. That is coming up in an hour and a half's time. So if you're watching us live on YouTube, please do grab a coffee, stick around, and come back because we'll be myself and Shane and Connor will all be on the live stream on YouTube and in the room covering all of the key market drivers for next week. So that is something that you are not going to want to miss. It's definitely going to be a good debate, particularly what has been happening in the retail forex market at the moment on a certain prop firm. Maybe we will even touch on that because that is big news and a lot of people will have been stung by that. I know some guys in the trading room trading with that firm as well, so we'll maybe get a chance to touch on that too. However, what we are gonna I'd like to just quickly talk about is we have got a new trading framework in the trading room at the moment. We've been piloting it over the last few weeks. It's starting to get some decent traction, and if you are new to trading, watching on YouTube and and you've never traded before and you're looking to get started, have a look at this. This is called TST. This is our new trading framework. It's a new trading drill that we have in the trading room that is designed to get you ready for trading a strategy. There is a very, very key fundamental problem that most people have in learning how to trade. This is what happens. They always start by downloading a platform, going on a forum, and they start clicking buttons. What happens from there? They start to see that they can make and they can lose money, and they develop a lot of random results as a consequence of that. But when you get a few winners, you start to think that you've got it all figured out. And what can happen is you start to develop, because you don't really yet know what you don't yet know, you start to develop a lot of false beliefs. So I'm talking things like thinking that the market always comes back. Yeah, so I don't necessarily need to use a stop loss. Why? Because every time I do, I get stopped out, but I see the next day the market then comes back, and then you start to think that always happens until it doesn't, and then you blow up an account. If you've traded real money before and that has happened to you, you'll know exactly what I mean. From there, what people tend to do is they develop a lot of bad habits, and it's those bad habits that really do are the biggest problem for all new and developing traders in the market. Usually what then happens is most people then start to look at what they're doing and think, okay, this is not working. I know the solution is a strategy. That's what I need. That's why it's not working, because I don't have a strategy. They go and look for a strategy, but they are fully unprepared. They then take into that strategy all of this dreadful journey that they've been on. That is what our new TST framework is designed to fix, and it does a great job of that. This is not a trading strategy. What it is, it's a proper drill. It's a game changer in retail Forex education, and it's designed to give you a solid trading mindset and build your confidence. So whether you're starting from zero and you've never traded before, or you've got a few bad habits and you've blown up a few accounts, this is the kind of like a framework that can really help you develop as a trader. We start with a top-down market filter approach where we scan the markets every day looking for where the volatility is. We then move into an automated expert advisor in MT4 where we look for key patterns and we connect that with automatically generated support and resistance. And then if all the stars align and we see a decent trading opportunity, we then align that with our risk manager, take some risk, and then we journal our results. And what's happening there is you're developing the right kinds of habits as a trader. It's proved very, very, very successful in the trading room. A lot of people are getting a lot of decent education out of this, and we're now sort of like ready to sort of take it live. So if you are interested, please do head on over to howtotrade.com and have a look. It is certainly something that you should can consider. Think of it like a bridge. It's a bridge between knowing nothing and wanting to get involved, wanting practical educational content that is really going to help you develop the right type of habits. No question, you need that when you move into an area where you then decide to take a profitable strategy and you stand a much better chance of being successful. That is what it looks like on MT4. It's called TST because it stands for Triple Screen Trader, because we use 3 key tools out of the suite of tools that we have at howtotrade.com, and we use those in a very particular way so that you can get quick feedback on your progress. And it's doing well. It is proving very popular indeed. Okay, so that is pretty much everything that I've got for today. So, like I said, we are going to be coming up on YouTube live again in about just over an hour's time, an hour and 20 minutes, where we'll be covering all of the markets for next week, looking at some key market drivers. If you're looking for any trade ideas, then please do come along and have a look at that. It will certainly be useful to do. But it looks like volatility is picking up now in the markets, and that could potentially set the stage for the rest of 2023. Welcome to September. Thank you very much for watching, and we'll see you very soon.